Everyone's betting on the next big winner in crypto. But what if the biggest play is right in front of us? With the bull market heating up, layer 1 blockchains are back in the spotlight, and the battle for dominance is more intense now than ever before. Will it be Solana? What about Cardano? Maybe it'll be a rising underdog like Sui or Avalanche. Or maybe a new unknown project will step in to steal the spotlight. Welcome back to JRNY TV, the home of crypto deep dives, alpha leaks, and no BS breakdowns. Today we are digging into one of the biggest questions of the cycle. Which layer 1 blockchain is most likely to dominate the next wave of adoption and give you that 10x plus return in the process? Understanding layer 1 blockchains and their market impact. Layer 1 blockchains serve as the foundational infrastructure of the crypto ecosystem. They process and validate transactions without relying on another network, making them integral to the functionality of decentralized applications, known as dApps, decentralized finance, known as DeFi, non-fungible tokens, known as NFTs, and a lot more. This central role contributes to their substantial market capitalizations. As of May 2025, the total market capitalization of layer 1 blockchains stands at approximately $2.86 trillion. But who's counting, right? Highlighting their dominance in the crypto market. Ethereum leads the pack, but other platforms like Solana, Cardano, Sui, and Avalanche are all making significant strides. Solana, for instance, has gained popularity due to its high throughput and low transaction costs, attracting a growing user base and developer community. Cardano's research-driven approach and focus on scalability has positioned it as a strong contender in the layer 1 space. Sui, a newer entrant, is gaining attention for its innovative technology and potential for rapid growth. Avalanche's unique consensus mechanism and subnet architecture offer flexibility and speed, appealing to a wide range of applications. Identifying the next layer 1 blockchain before its user base and adoption skyrocket is crucial for investors that are seeking significant returns. Solana, the speed demon of crypto. Solana has become a household name in crypto, and it's not an accident. Known for its blazing fast speeds and rock-bottom transaction costs, Solana has managed to position itself as the go-to chain for high-volume, high-frequency use cases. From NFTs to DeFi, and especially meme coins, Solana has captured serious attention. In fact, it regularly handles more transactions per second than Ethereum and Bitcoin combined. Wrap your head around that for a second. By a long shot. It's become so efficient and widely used that some are calling it the Visa of crypto. But it's not just about speed. The Solana ecosystem has grown rapidly thanks to developer support as well as innovation. Solana-based apps like Jupiter, as well as Pump.Fun and Phantom, have brought in millions of users, and Solana's daily active addresses, they are currently rivaling Ethereum's. Solana Pay, their push into real-world commerce, is showing potential to onboard traditional users through seamless Web3 payments. Its ability to scale while remaining cheap is exactly why projects are flocking to it. Institutional interest has also started brewing again. As Solana continues to recover from past challenges, including the fallout from FTX, it has proven its staying power. Recent VC rounds are showing renewed confidence, and Solana's community continues to rally behind its mission, with the recent meme coin craze pushing network usage to new highs. Solana has carved out a strong foothold heading into this bull cycle. If you are looking for a layer 1 that already has the momentum, adoption, and clear product market fit, Solana is very difficult to ignore. The real question now isn't whether or not Solana is solid, it's whether or not it can hold its lead when challengers like Sui and Avalanche gear up to compete. Stick around, because we are about to dive into another serious contender, Cardano. Cardano, the academic powerhouse with big ambitions. Cardano has always done things a little differently, but in a good way. Built on peer-reviewed research and scientific rigor, it aims to provide a secure and scalable blockchain while remaining fully decentralized. While it's often been criticized for its slower development pace, that's starting to pay off. With the recent Plutus and Mithril upgrades, Cardano has dramatically improved its scalability as well as smart contract efficiency. But the real game changer, the Leos upgrade, which is expected to significantly boost transaction speed as well as performance across the entire network. But what really sets Cardano apart is its decentralized ethos. Unlike Solana, Cardano, or ADA has never experienced a network outage. And its stake pool operator model, it gives it one of the most community-driven consensus structures in the entire space. It's also seeing growing activity with Cardano native assets. Over 9 million tokens have now been minted. And new tools like the Lace wallet and sidechains like Midnight, they're opening up new frontiers, including privacy and Bitcoin interoperability. Institutional buzz is also building. Rumor of government-level partnerships and potential integration with Ripple's XRP for global payment systems have continued to fuel speculative excitement. Founder Charles Hoskinson has been more vocal about Cardano's long-term mission, signaling new developments in identity, governance, and RWA integrations. If you don't know what RWAs are, please do your own research. And while ADA, where Cardano's current price is still far from its all-time high. Analysts believe that with adoption and momentum picking up, ADA has serious upside. Some forecasting $2 to $2.60 in the short term, with the $10 mark as a possible long-term target. So while Cardano may not be as flashy as Solana or Sui, it is building quietly and methodically with the strong potential to explode when the market fully catches on. And speaking of flashy and fast, next up is Sui, a blockchain designed for speed and simplicity that's already making noise. Sui, the rising star built for speed and simplicity. Sui is one of the newest layer 1 contenders, and it's already making serious waves. Developed by former Meta engineers under Miston Labs, Sui was designed from the ground up to prioritize speed, scalability, and an intuitive user experience. Its very unique architecture utilizes something called object-centric data structures, which drastically reduces bottlenecks in transaction processing. The result? A blockchain that can process hundreds of thousands of transactions per second with extremely low fees, making it perfect for gaming, NFTs, as well as consumer-facing applications. What's really helped Sui gain early traction is its growing ecosystem as well as community. Projects are launching fast, especially in gaming and DeFi sectors, with names like Cetus, Typus, and Aftermath Finance all gaining traction. There has also been increased VC and institutional interest in Sui, as it fills a niche that sits somewhere between Solana's lightning speed and ADA's methodical build. As of mid-2025, Sui is seeing record wallet creation, increased developer activity, and rising TVL, which means total value locked, in DeFi, which are all clear signs of growing real-world use. But it's not just hype. Sui is proving its strength in real-world tests right now. Even after facing a $200 million exploit on the Cetus DEX, the Sui Foundation acted quickly, freezing stolen assets and maintaining stability across the network. That kind of response has given investors much more confidence in Sui's long-term resilience and reliability. It also proved that even as a new layer 1 in the space, Sui is more than prepared to operate at a professional, institutional grade level. So, is Sui the next Solana? Possibly. It's still early days, but fundamentals, they're strong. The team is stacked, and that infrastructure, remember that stuff? Yeah, it's being built rapidly right now. But we've still got one more major player to talk about, Avalanche. Let's take a look at what it's doing differently and why it's still one of the most underrated L1s in the space today. Avalanche, the custom blockchain powerhouse. Avalanche is carving out a unique position in the layer 1 race by doing something that others are not, letting developers spin up their own highly customizable blockchains known as subnets. This modular approach, it gives Avalanche unmatched flexibility, and it makes it incredibly appealing for institutions, gaming studios, and large-scale enterprises. Instead of forcing every single project to share the same chain and resources, those subnets, they allow for isolated environments tailored to specific needs. That's why it's been gaining serious traction with enterprise-grade partnerships. And speaking of partnerships, Avalanche has been making moves. In early 2025, it secured a high-profile collaboration with the one and only FIFA for digital collectibles and fan engagement tools, marking a major win in the sports as well as entertainment world. And on top of that, both JP Morgan and Citibank have chosen Avalanche's tech to experiment with blockchain-based financial services, including, but not limited to, tokenized assets and cross-border settlement tools. These are not minor players. This is institutional validation at the highest level possible. Avalanche is also no slouch when it comes to speed and cost. Its consensus mechanism allows for finality in under 2 seconds, making it faster than Ethereum and more decentralized than Solana. Its low fees and eco-friendly proof-of-stake model also make it attractive to projects that care about sustainability. You combine that with its rapidly growing ecosystem, especially in gaming, DeFi, and RWAs, and you have got yourself a blockchain with real staying power. While Avalanche might not be the loudest in the room, its tech is serious, its partners are massive, and its real-world applications, they're stacking up. It may not have the same meme-driven hype of Solana or the grassroots following of Cardano, but in terms of pure infrastructure and flexibility, Avalanche is one of the smartest bets in the L1 space. The underdog L1s. Is Hyperliquid the sleeper hit of 2025? Everyone's watching the top dogs like Solana and Cardano. But what if the next dominant layer 1 isn't even classified as one yet? Hyperliquid is one of those projects quietly gaining steam, and while it's technically not a traditional L1 blockchain, it's operating like one. Built as a decentralized, perpetual exchange with its own custom infrastructure, Hyperliquid is proving that you do not need to be labeled an L1 to function like one. What's fascinating about Hyperliquid is that it runs on a custom chain purpose-built for speed, low latency, and scalability. This allows it to deliver the kind of performance that you'd expect from top-tier L1s, but optimized specifically for trading and DeFi. Its native hypertoken has gained serious attention, and the user experience on the platform, that has been praised for feeling like a centralized exchange without the custodial risk. That is a big deal in a space where trust and speed are everything. What's more more is Hyperliquid is attracting serious trader attention thanks to its fully on-chain order book and zero gas fee model, with DeFi heating up again in 2025, especially as retail and institutional players everywhere look for non-custodial platforms to trade on. Hyperliquid's infrastructure puts it in a prime spot to capitalize. It's also early days, but if it continues gaining users as well as liquidity, it could easily evolve into a full-fledged L1 ecosystem in its own right, or even inspire a whole new category. And that's the takeaway here. While everyone's distracted by those flashy memes and major chains, the game changer might be something like Hyperliquid. Lean, purpose-built, and growing fast, but under the radar. So you prepare for the next leg of the bull run. You keep an eye on these unconventional L1 style platforms. They might not look like they're giants now, but in crypto, the underdogs, they can flip the script overnight. Who's gonna win the layer 1 war? So after everything that we just covered, Solana's blazing speed, a massive meme coin economy, ADA or Cardano's slow but steady ecosystem growth and unique tech, Sui's cutting edge object-based architecture, Avalanche's modular subnets and institutional focus, and even underdogs like Hyperliquid pushing the boundaries of what an L1 can be. The big question remains, who takes the throne? Here's the truth. There may not be just one winner. The future of crypto is likely multi-chain, where different layer 1s serve different purposes. Solana might dominate retail and consumer dApps. Cardano could become a hub for secure enterprise and government-grade blockchain solutions, but Sui might capture the dev crowd that's looking for scalable innovation. Don't forget Avalanche. Avalanche could serve as the powerful launchpad for custom chains. The possibilities are endless. Meanwhile, up-and-comers like Hyperliquid might carve out their own niche entirely, offering something none of the big chains can. But as an investor, you don't need to pick just one. That's the best part. But the smartest move is to identify which layer 1s are gaining traction, which communities are growing, which ecosystems are building real value, and then you position yourself accordingly. Altcoin season is creeping in fast, and L1 tokens tend to lead that charge. Now is the time to finalize that strategy. You decide your entry points and get ready to ride that wave. And that about wraps it up for today's episode on JRNY TV. If you're finding value in these breakdowns and would like more updates like this, please be sure to smash that like button, hit subscribe, and join the community. Drop a comment below on which layer 1 you're betting on to lead the pack throughout 2025. Let's talk strategy, let's talk gains, and as always, stay ahead of the herd.